8 simple steps to buying a home. What's up, everyone? It's Rick from Budgets and Brews, and today is Freaky Fast Finance Friday. Let's speed right in. Step number 1, prepare your credit for mortgage approval. What does that mean? That means that we want your credit to be in the best shape it can be to save you the most amount of money on your home. Having a bad credit score could actually disqualify you for a loan, which means you can't get a house. And number 2, it could also cost you a higher interest rate, in return, more money out of your pocket. I actually did an episode number 5. It was 5 tips to improve your credit. I'm going to link that. Check that out. But even 1% going from 3 to 4 on a 30-year loan at $200,000 could cost you paying an extra $50,000 at the end of it. So don't do that. Check out that episode. Step number 2, list the features you want in your home before you start looking. It will just save you time. Write a list. 1 to 10, 1 to 20, whatever it may be, and prioritize that list. Is it most important for you to live in a cul-de-sac? Or how about by a school district? Do you want a furnished basement? How about a big backyard? Are there certain amenities you want in your home? Whatever that may be. Commute to work, that's a big one for me. I'm going to list those out, and that way, when I'm going somewhere on a showing, I could be like, no, I do not want this home, or ooh, it has a lot of the features that I want. It's just going to save you time, so do it. Step number 3, figure out what you can afford, okay? So what we want to do is once we know what our down payment is going to be, then we can use any monthly mortgage calculator to figure out how much we're going to actually be paying per month. I'll link one for you in the description that you can use, but you could pretty much use any of them that you could find online. The other thing that we're going to want to do is make sure that if we put 20% or more down, we're going to be avoiding PMI, which is private mortgage insurance, which can save you anywhere between $50 to $150 a month. So that is a good thing. How do we know how much home to buy? A rule of thumb says that 3 times your annual household income is the amount of home you can buy. I go 25% of my take-home monthly pay household. If it's 25% or less, if that cost is going towards housing, that's good for me. Step number 4, get pre-approved before home shopping. Why do we want to do this? We want to know how much home we can afford. Why do we want to do that? So we're not wasting our time looking at homes that are way out of our price range, and we're not going to get approved from them anyway, so that means we can't buy them. What a pre-approval is, it's a commitment to the lender, to you, to say, hey, in this certain time period, 30 days, 90 days, this is the amount that we can qualify you for. So you know when you're shopping in that time range, if it's something that catches your eye and it works with your budget, that's the home you could afford. Step number 5, find a good real estate agent. This is somebody who's going to advocate for you on your behalf. This is someone who's going to negotiate for you. They are going to show you MLS listings, the multiple listing service. They are going to send you emails with your search criteria whenever one of those comes available to you. They're going to be taking you to look at the home. They're going to be telling you about the home. They're there on your behalf. They work for you, and they do a bunch of other things too, not only just negotiate to help you get the best price. P.S. I'm a real estate agent. You could look me up in the Cleveland area if you choose to do so. Step number 6, make a reasonable purchase offer. This is something that the real estate agent will help you do, but they're going to be able to run a comparative market analysis and see what the prices are going for. They could pull up the MLS and see what the homes around that area sold for, or what they're listed at currently. If we're in a buyer's market or if we're in a seller's market. Right now it's a seller's market. There's low inventory and homes are selling for above the listing price. They're going to be able to know that, and they'll be able to run the calculations to say we need to make a good offer of 5% above this listing or 10% above this listing. And if it's a buyer's market, then we can go 5-10% below. Use their wisdom. That's what they're there for. Step number 7, work through contingencies. Once again, you're going to want to do this with your real estate agent, but these are things like negotiation, home repairs, home inspection, making sure you sell your home first before you move in, a move-in date. Anything could be a contingency, but the agent is going to help you add or remove some of those. And what that does is it's going to help benefit you, but we don't want to just overload it with contingencies as well, because then that could turn off a seller, especially in a seller's market where they might be looking at 4, 5, 6 different offers. The one with the least contingencies, they're probably going to choose that, but there's a whole bunch of other things that go into that. The real estate agent, once again, they're there to help you. Number 8, we made it. Close the deal. So after everything looks good on paper, we are going to do a final walkthrough, make sure everything's spick and span, and congratulations, then you just bought your first home. And just like that, we are at the finish line. If you want to tune in next week, I'm going to be talking about 30-year versus 15-year mortgage, which one's better and why. Also, don't forget to check out our website, budgetsandbrews.com. It's got apparel, it has podcasts, it has beer reviews, it has financial articles, everything. The whole gamut is there. Check it out. Like the YouTube video, subscribe to our channel. All of that is much appreciated. Drop a comment if you enjoy this and go ahead and give it a share. The comment section is out of control down there. That does it. See ya.